deals in history is going public. David Faber joins us now with some details. David.
Thanks, Melissa. And perhaps a reflection of what is a very poor IPO market. KKR choosing not to go through a traditional initial public offering, raising capital by issuing its shares, but through what is essentially an exchange offer for an entity that already trades called KPE. KPE is a fund that KKR launched a couple of years back to allow people to invest along with it. It invests in the debt and equity of KKR deals. Now, KKR is essentially going to be swapping 21% of itself for KPE, which, by the way, was a $5 billion offering when it was done. They raised $5 billion sometime back. As you can see, it's nowhere near that any longer. As a closed-end fund, it is well below that. They claim the net asset value was as much as $22.25 per unit. KPE trading up today, but well below that. And in effect, this will at least be, it's been kind of a black mark on KKR. And so by moving ahead on this IPO, they will be erasing that if KPE shareholders vote in favor. Now, what does it give KKR as it lists on the New York Stock Exchange? And again, this will be the actual KKR. Well, you get your stock. It gives the ability to keep people and attract new employees by giving them stock, by giving them incented currency, essentially. It's also going to allow KKR to pursue acquisitions, of course, and new lines of business. Certainly not an insignificant thing to note here, because fixed income or infrastructure or any of other businesses outside of traditional private equity seem to be becoming very important as private equity struggles right now with the inability to get large amounts of debt financing to back deals. Of course, these last few years have been extraordinarily active ones for KKR. They now expect to be a public company, perhaps as soon as the end of the year, again, by way of this exchange offer, Melissa, not a traditional IPO, but they will ultimately control that $5 billion worth of assets in KPE, which ultimately will accrue back to KKR, and they can reinvest in their own deals along with their LPs. Let me send it back to you.
Interesting. All right, David Faber, thanks so much. Let's talk about the deal more, and also, of course, the markets. On call today is Leo Hendry, managing partner at Intermediate Partners. He's a CNBC contributor. Also with us is Miles Zeblock, chief institutional strategist at RBC Capital Markets, and CNBC's Bob Bassani is with us as well. Leo, let me start with you, because yours is a private equity fund. Would you want to go public right now? Is this a tough time?
You know, I think, Melissa, David described the transaction well, and I think it's a smart transaction for KKR. It is by no measure a seminal deal. You got to remember, as David has described in the past, that KKR has been trying to go public in addition to KPE, Melissa, for over a year. And this particular transaction is born not out of opportunity, but really out of the distress that David describes that KPE's gone through the last year and a half. And so, I mean, it's smart for KKR, but it's born on the detritus of KPE. I think it'll be an easy exchange. I think that the KPE shareholders have had their heads handed to them, and it'll be wise to move into the bigger parent of KKR, which is still a wonderful asset. But it's not some, it's